Anyway, that's Raghuram Rajan for you.
I took charge this afternoon as the 23rd Governor of the Reserve Bank of India. This is not an easy time. The economy does face challenges. At the same time, India is fundamentally a sound economy with a bright future. Our task today is to build a bridge to the future over the stormy waves produced by global financial markets. I have every confidence we will succeed in doing that. Today, I want to articulate some first steps, concrete actions we will take, as well as some intentions to take actions based on the plans we will formulate. Before I turn to specifics, let me repeat what I said on the day I was appointed. The Reserve Bank of India is a great institution with a tradition of integrity, independence, and professionalism. I congratulate Dr. Subba Rao on his leadership in guiding the bank through very difficult times, and I look forward to working with the many dedicated employees of the RBI to further some of the important initiatives that he started. I've been touched by the warmth with which the RBI staff have welcomed me today. To the existing traditions of the RBI, which will be the bedrock of our work, we will emphasize two other traditions that become important in these times: transparency and predictability. At a time when the financial markets are volatile and there is some domestic uncertainty because of impending elections, the Reserve Bank of India should be a beacon of stability as to its objectives. That is not to say we will never surprise the markets with actions. A central bank should never say never. But the public should have a clear idea of where we are going and understand how our policy actions fit into the framework that we articulate. Key to all this is communication, and I want to underscore communication with this statement on my first day in office. Let me turn first to monetary policy. We will be making the first monetary policy statement of my term on September 20th. I have postponed the original set date a bit so that between now and then I have enough time to consider all major developments in the required detail. I will leave a detailed explanation of our policy stance till then. But let me emphasize that the RBI takes its mandate from the RBI Act of 1934, which says the Reserve Bank of India was constituted to regulate the issue of banknotes and the keeping of reserves with a view to securing monetary stability in India and generally to operate the currency and credit system of the country to its advantage. The primary role of the central bank, as these words suggest, is monetary stability, that is to sustain confidence in the value of the country's money. Ultimately, this means low and stable expectations of inflation, whether that inflation stems from domestic sources or from changes in the value of the currency, from supply constraints or demand pressures. I've asked Deputy Governor Urjit Patel, together with a panel he will constitute of outside experts and RBI staff, to come up with suggestions in 3 months on what needs to be done to revise and strengthen our monetary policy framework. A number of past committees, including the FSLRC, have opined on this, and their views will be considered carefully. I talked about the primary role of the RBI as preserving the purchasing power of the rupee, but that is not its only role. We have two other important mandates: inclusive growth and development, as well as financial stability. As the central bank of a developing country, we have additional tools to generate growth. We can accelerate financial development and inclusion. Rural areas, especially our villages, as well as small and medium industries across the country, have been important engines of growth, even as large company growth has slowed. But access to finance is still hard for the poor and for rural and small and medium industries. We need faster, broad-based inclusive growth, leading to a rapid fall in poverty. The Indian public would benefit from more competition between banks, and banks would benefit from more freedom in decision-making. With this in view, the RBI will shortly issue the necessary circular to completely free branch banking, or I should say completely free bank branching for domestic scheduled commercial banks in every part of the country. No longer will a well-run scheduled domestic commercial bank have to approach the RBI for permission to open a branch. We will of course require banks to fulfill certain inclusion criteria in underserved areas in proportion to their expansion in urban areas. and we will restrain improperly managed banks from expanding until they convince supervisors of their stability. But branching will be free for all scheduled domestic commercial banks except the poorly managed. There has been a fair amount of public attention devoted to new bank licenses. The RBI will give out new bank licenses as soon as consistent with the highest standards of transparency and diligence. We are in the process of constituting an external committee. Dr. Bimal Jalan, an illustrious former governor, has agreed to chair it, and the committee will be composed of individuals with impeccable reputations. This committee will screen license applicants after an initial compilation of applications by the RBI staff. The external committee will make recommendations to the RBI governor and deputy governors, and we will propose the final slate to the committee of the RBI Central Board. I hope to announce licenses within or soon after the term of Deputy Governor Anand Sinha, who has been shepherding the process. I remind you his term expires in January 2014. We will not stop with these licenses. The RBI has an excellent document on its website exploring the possibility of differentiated licenses for small banks and wholesale banks, the possibility of continuous or on-tap licensing, and the possibility of converting large urban cooperative banks into commercial banks. We will pursue these creative ideas of the RBI staff and come up with a detailed roadmap of the necessary reforms and regulations for freeing entry and making the licensing process more frequent after we get comments from stakeholders. India has a number of foreign-owned banks, many of whom have been with us for a long time and have helped fuel our growth. They've been in the forefront of innovation, both in terms of improving productivity as well as in terms of creating new products. We would like them to participate more in our growth, but in exchange, we would like more regulatory and supervisory control over local operations so that we are not blindsided by international developments. The RBI will encourage qualifying foreign banks to move to a wholly owned subsidiary structure where they will enjoy near-national treatment on a reciprocal basis. We're in the process of sorting out a few remaining issues so that this move can be made. Finally, our banks have a number of obligations that preempt lending and in fact allow what Dr. Rakesh Mohan, an illustrious former deputy governor, called lazy banking. One of the mandates of the RBI in the Act is to ensure the flow of credit to productive sectors of the economy. In this context, we need to reduce the requirement for banks to invest in government securities in a calibrated way to what is strictly needed from a prudential perspective. This cannot be done overnight, of course. As government finances improve, the scope for such reduction will increase. Furthermore, as the penetration of other financial institutions, such as pension funds and insurance companies, increase, we can reduce the need for regular commercial banks to invest in government securities.